is in chaos. Stocks are plunging. American families are already paying the price, with basic goods costing thousands more per year. But this isn't just China walking away. It's something much bigger. China isn't retreating, it's repositioning, redirecting its capital into Asia, Europe, and even longtime U.S. allies like Saudi Arabia. It's building a new global financial system, one where the dollar is optional, and America is no longer at the center. So, what's really happening here? Is this economic revenge? Or the first crack in the foundation of U.S. global dominance? Let's break it down. $1 trillion shock, and no one saw it coming. Imagine waking up and discovering $1 trillion had just vanished from your economy. No explosions, no alarms, just silence, and then a market crash. That's exactly what happened when China's government quietly halted all new investments into the United States. The order came from SAFE, China's State Administration of Foreign Exchange, on March 17, 2025. No more capital to American firms. No new cash into U.S. tech, real estate, or energy. Just stop. At the same time, China's Ministry of Commerce reclassified the United States as a high-risk investment destination, suspending all non-essential capital transfers. No fanfare, just a few leaked documents, later confirmed by Reuters. The result? Total freeze. Done. Finished. Chinese investment in the U.S., which peaked at $46 billion in 2018, had already shrunk to just $2.3 billion by 2023. Now, zero. The $1 trillion headline refers to the estimated value of Chinese money that once supported U.S. markets, from stocks and bonds to factories and apartment towers. Professor Zhao Daozhang of Peking University called it a financial knockout punch, a precise non-military attack on the soft underbelly of the U.S. economy, its dependence on foreign capital. Hidden weakness. Foreign money. The United States projects strength, power, and dominance. But underneath the surface lies a major vulnerability. It relies on foreign cash to function. Despite America First slogans, the U.S. economy is deeply globalized. In 2023, the U.S. was the world's top recipient of foreign direct investment, pulling in $311 billion, according to Visual Capitalist. That money builds factories, funds startups, and supports jobs. Beyond direct investment, foreign investors hold an estimated $128 trillion in U.S. financial assets, per Bank of America. That includes everything from Treasury bonds to real estate, stocks to private equity. This foreign money keeps markets liquid, supports the dollar, and finances U.S. debt. But in 2025, U.S. net foreign liabilities officially exceeded 100% of GDP, meaning America now owes more to the world than it earns in a year. Foreign money is the oxygen. Without it, borrowing costs surge. Growth stalls. The machine grinds to a halt. That's what makes China's move so dangerous. The cost of America First. The Trump administration's 2025 trade strategy, dubbed America First 2.0, centered on steep tariffs, foreign investment reviews, and industrial policy. Supporters claim it protects U.S. jobs and national security, but the numbers tell another story. Foreign direct investment fell 34% from Q4 2022 to Q1 2025, dropping from $88.5 billion to just $58 billion, according to the Bureau of Economic Analysis. Equity investment collapsed 62.5%. The reason? Uncertainty. Paul Ashworth, chief economist at Capital Economics, warned that Trump's tariff threats and sudden policy shifts were paralyzing investment decisions. And it's not just China. Investors across Europe, Japan, and the Gulf are getting cold feet. Meanwhile, proposals like Section 8.99, a 20% tax on foreign earned income are sending more investors running. Peter Navarro called foreign-backed U.S. factories scams, even as BMW and Toyota employ tens of thousands of Americans. The irony? America's bid for self-sufficiency is cutting it off from the very capital it needs to succeed. Where is China sending its money? China isn't hoarding its capital. It's redirecting it. In 2024, China sold $57 billion in U.S. Treasuries, slashing its holdings to $756 billion, the lowest since 2009. And Chinese banks have begun severing dollar-based deals with U.S. institutions. So where is this money going? A leaked HSBC report shows China is funneling billions into fast-growing economies like Vietnam, Indonesia, and the Philippines, regions forecasted to grow 4.7% in 2025. European companies, too, are embracing China. BASF, Germany's chemical giant, is pouring $10 billion into Chinese operations. European investment in Chinese manufacturing jumped 19%. In early 2025, even U.S. allies are moving. Saudi Arabia is teaming up with China and Singapore to create a $50 billion tech fund. And the digital yuan, China's central bank digital currency, is now used in 13 countries for international trade, bypassing the dollar entirely. This isn't random. It's deliberate. China is building a parallel financial system, one where it calls the shots. Wall Street melts down when the freeze became public. The Dow Jones dropped 1,200 points in a single day. Investors pulled $120 billion from U.S. stock funds over 3 months, according to Bloomberg. Smaller firms, the backbone of U.S. innovation, are getting crushed. With China out and others spooked, capital is drying up. Norway's sovereign wealth fund pulled billions from U.S. tech. Japan's largest pension fund cut 30% of its U.S. real estate holdings after bank downgrades. And with $4 trillion in corporate debt maturing by 2026, companies are now turning to junk bonds, borrowing at nearly 10% interest. That's up from 5.2% in 2022. It's a financial chokehold, slowly strangling U.S. business. The real-world pain. For ordinary Americans, the pain is becoming visible. Trump's new 50% tariffs on $500 billion worth of Chinese goods are hitting wallets hard. According to the Bureau of Labor Statistics, appliance prices surged in early 2025. Walmart and Target warned of shrinking margins. And the National Retail Federation estimates U.S. families will pay an average of $1,950 more this year, just to buy the same essentials. Inflation remains above the Fed's 2% target. Wages are stagnant. Consumer spending is falling. And corporate profits are withering. S&P 500 earnings grew just 1.2% in late 2024, down from 4.5% a year earlier. This is the result of compounding pressure, tariffs, capital flight, and rising rates, and it's putting the entire economic recovery at risk. Can the U.S. rebuild alone? President Trump's 2025 executive order aimed to bring manufacturing back home, promising tax breaks for domestic factories and big subsidies for chipmakers under the CHIPS Act. But the money's not showing up. The National Association of Manufacturers warned that projects are stalling due to lack of funding. An $8 billion battery plant in Michigan? Frozen. A $3.1 billion robotics hub in Nevada? Canceled. Intel's $20 billion chip plant in Ohio? Delayed. Again, the problem isn't patriotism. It's capital. Without foreign backers like China, Taiwan, or Europe, the money simply isn't there. And with high Fed interest rates, U.S. banks aren't filling the gap. The dream of industrial revival is running out of fuel. The real crisis. Trust this isn't just an economic battle. It's a crisis of confidence. The U.S. economic policy uncertainty Index hit record highs in early 2025, higher than during COVID, and even the 2008 crash. CEO confidence plummeted to 37, and 7 out of 10 business leaders now say they can't make long-term plans due to political instability, trade chaos, and unpredictable regulation. America, once seen as a safe haven for global capital, is now being viewed as a risk. That's why even allies are hedging their bets. Germany, France, Japan, Saudi Arabia, they're not abandoning the U.S., but they're moving quietly. And increasingly, they're moving toward China. Why? Because Beijing is offering something Washington can't: predictability, a new financial order. In the first half of 2025, China approved 38 new foreign company listings, a 52% increase. Shanghai and Shenzhen are emerging as viable rivals to New York and London. At the same time, China is expanding the reach of its digital currency. In countries like Thailand, Laos, and Indonesia, tourists and merchants are using the digital yuan to buy groceries, pay for taxes, and settle trade, all without touching the US dollar. Cross-border pilots are active in Malaysia and Singapore, allowing businesses to settle invoices using ECNY wallets. The implications are massive. This isn't just about payment. It's about power. What happens next? Is this just a blip? Or is it the start of something much larger, a global rebalancing? Because if China keeps building this alternative financial system, one that doesn't rely on the U.S., doesn't need the dollar, and attracts capital from America's own allies, then Washington's dominance is truly at risk. The U.S. still has time to course correct. It can stabilize policy, reopen funding channels for projects like the CHIPS Act, reduce interest rates, and most importantly, rebuild trust. But the window is closing. And if nothing changes, this trillion-dollar shock won't be a one-time hit. It'll be the beginning of a new global era, and America may no longer be leading it. Thanks for watching. Make sure to like, subscribe, and stay tuned, because what's coming next could shake the world economy.